This is pre-market pulse, powered by Zinch, a fast, clean read on the tone of the market before the opening bell. No hype, no noise, just the signals that matter. Here's how the market is setting up this morning.
Trump signals Iran war could end soon. Oil plunges below $100 for first time. S&P 500 futures plus 0.54%, Nasdaq plus 0.74%, Dow plus 0.54%. Retail sales at 8:30 a.m. Eastern Time. Q2 begins with hope. U.S. index futures are solidly higher this morning as markets welcome signals that the Iran war could end soon. The S&P 500 futures are at 6,444, up 0.54%. The Nasdaq futures are at 23,472, up 0.74%. The Dow futures are at 45,745, up 0.54%. This is a significant rally as Q2 begins. The market is pricing in a scenario where the war winds down, oil prices normalize, and the Fed can eventually cut rates. Oil prices have collapsed. Brent crude has plunged below $100 for the first time since the war began, trading at $98.50, minus 5.7%. WTI is at $89.75, minus 5.5%. This is a dramatic reversal from last week when Brent was at $112.50. The geopolitical risk premium is evaporating. Trump signals war could end. Overnight, Trump signaled that the Iran war could end soon. In a statement, Trump said he believes the war is winding down and that he's optimistic about a resolution. This is a significant shift from his "finish it" comments just days ago. What changed? Negotiations are progressing. Iran and the US appear to be making headway on a ceasefire agreement. The details are still being worked out, but both sides seem motivated to end the conflict. The Houthi escalation didn't trigger broader war. The Houthis fired missiles, but Iran didn't respond with massive retaliation. This suggests Iran is serious about de-escalation. Oil prices are signaling the market believes it. Brent crude below $100 is a vote of confidence that the war is ending. Traders don't move oil prices this dramatically without conviction. The market is interpreting this as a major positive. If the war ends, oil could retreat to $70 to $80 by mid-year. Inflation pressures ease. The Fed can cut rates. Equities can rally from correction territory. Consumer spending can accelerate. This is a structural shift in market dynamics. For the past 2 weeks, the market has been driven by geopolitical risk. Now, it's being driven by de-escalation hope.
The pre-market tone futures are up solidly, and the tone is optimistic. This is a relief rally with real conviction behind it. Traders are now pricing in war ending by mid-April. Oil retreating to $80 to $90. Fed rate cuts, starting in Q3. S&P 500 rallying to 600 to 700 by mid-year. Consumer sentiment recovering. But there are important caveats. This could be premature, negotiations could stall. Trump could change his mind. The war could re-escalate. Oil could spike back above $110. Retail sales at 8:30 a.m. Eastern Time. The most important economic data today. If consumer spending is weak, it could trigger selling despite the war optimism. Q2 positioning. This is the first day of Q2. Traders may be buying to improve quarter-end performance. This could reverse if sentiment shifts. The April 6 deadline still matters. Trump's pause on Iranian energy strikes expires April 6. If negotiations don't produce results by then, the market will reprice lower. What's on the calendar? 8:30 a.m. Eastern Time. Retail sales March. The headline number. Consensus is expecting 0.2% growth. If the number is weak, below 0%, expect selling. If it's strong, above 0.5%, expect the rally to accelerate. 8:30 a.m. Eastern Time. Retail sales ex auto. A look at core retail spending. This is more important than the headline number because it excludes volatile auto sales. 10 a.m. Eastern Time. ISM Manufacturing PMI, a gauge of manufacturing activity. Consensus is expecting 48.5, below 50 equals contraction. A number below 48 would signal weakness. Throughout the day, earnings continue. Watch for any guidance cuts or warnings about geopolitical impact. The setup. The market is caught between two forces. Bullish, war-ending signals. Oil below $100. De-escalation momentum. Q2 fresh start. Oversold technical setup. If retail sales is strong, the rally could accelerate. Bearish. War could re-escalate. Retail sales could disappoint. Manufacturing PMI could signal weakness. The April 6th deadline is approaching. Consumer sentiment is weak. The market is still in correction territory. The key variable is retail sales. If it's weak, expect selling despite the war optimism. If it's strong, expect the rally to accelerate, and a potential break above 6,500 on the S&P 500. For now, the market is celebrating de-escalation. The conviction is real. Oil below $100 is a powerful signal. But the rally is conditional on economic data staying resilient and the war not re-escalating. The bottom line. Wednesday morning brings a significant shift in market dynamics. Trump's war-ending signals, oil plunging below $100, and Q2 fresh start are all supporting a strong rally. The market is pricing in a scenario where the war ends, oil normalizes, and the Fed can cut rates. But the rally is conditional on retail sales being resilient and the war not re-escalating. Watch the data, watch Trump's comments, watch oil prices. This is a week where sentiment can shift quickly. For now, the tone is optimistic. The war is ending. Oil is normalizing. The market is ready to rally. But stay vigilant. Geopolitical risk is still the primary driver of volatility. That's the pre-market pulse for Wednesday, April 1, 2026. Thank you, and have a great day.